Hey, what's going on, everybody? Welcome to another episode of the Rapid Review. Appreciate everybody joining live on YouTube and on X. As always, chat is open on both, so feel free to drop any questions, comments, agree, disagree with anything I say. And when we go over some stocks later, feel free to drop any tickers that you want to take a look at, and I'll bring them up live. We're going to be breaking down overall market, leading themes, industries, and just basically looking at what went on in this complete chop fest that has been over the past week or two. So without further ado, it's time for the Rapid Review. All right, so let's get started. As always, there's a disclaimer, read through it. You guys know the deal. This is educational, informational purposes only, not financial investment or trading advice. All right, market direction, uptrend, power trend, still intact, still looking good. Distribution days, we're looking at 4 on the S&P, 6 on the NASDAQ. So looking at the distribution day tracker, and I'll just say IBD is showing different distribution days than I am. That is due to a volume thing. There are tons of different volume when it comes to the NASDAQ and the S&P. I'm going by a couple different sources that I have. They don't really disclose exactly where they're getting their volume from. So I just go with what I have, and it really doesn't honestly make much of a difference as to how I'm looking at the market right now. So that's why you're going to be seeing a difference. But in terms of what went on this week, on Wednesday, we had a day down on volume for both the S&P and on the NASDAQ. So you can see that day added over here on the bottom. And the NASDAQ on that Wednesday also lost the September 17th distribution day, and that was due to time, 25 trading days since that distribution day. Therefore, it drops off. So that's where we're at right now in terms of distribution. Looking into next week, we are going to see the 923 on the NASDAQ and the 925 on both the S&P and on the NASDAQ dropping off due to, again, time, 25 trading days. On top of that, we could also see this 1010 distribution day, very likely to see this drop off on the NASDAQ, very, very likely. On the S&P, there's a possibility, there's a chance. And that would be a 5% move from the close of that distribution day. And other than that, you really see, again, a very, very strong move could cause a drop on the distribution day of 1014 over here. Looking at what went on for the week, the S&P was up 1.92%. The NASDAQ was up 2.31%, and the Dow was up 2.20% for the week. And for the year, S&P up 15.47%, NASDAQ up 20.17%, and the Dow up 10.96%. So all green, all over the place, looking good. NASDAQ continuing to lead the way as it normally does. Looking at the moving averages, so last week we had that we were below the 10-day moving average on every index and on the Russell. This week we were able to take it and reclaim and get back above the top. So now we're green on all moving averages. Everything's sitting in the proper order. You can see just by these numbers, and we'll see it as you look at the charts as well, the 10 and the 21 did really, really converge on itself very, very tightly. They did not cross, but we did see that happen where they got very, very close to crossing. Yo, what's up, Vampro? All right, so let's jump over and take a look at the indexes. And we'll start off, as we always do, by looking at the NASDAQ. Oh, there we go. And we'll look at it on the daily. So, look, like we said, last week was a choppy mess. You had the close on that Friday of 1010, and then we kind of just chopped around up and down through both the 10 and the 21-day moving averages, completely sideways, but did hold over those lows, which was positive action. Finished out the week holding above the 21, which was positive, but closed below the 10. So then we came into this week. Monday was a strong start. We had a big gap up. We closed above from the open and held above that 10-day simple moving average. So very, very positive start to Monday, but I think a lot of us knew like that doesn't mean we're completely out of the woodworks, and we were trying to be a little bit more patient. We got the tightness we were hoping for on Tuesday as we kind of had this inside day over here, down just slightly, and we saw a little bit of a peak in volume over there. Wednesday is where we found out very, very quickly that volatility was not done with. We had a open that was pretty tight, but then we completely rolled over intraday. We broke the 10, we broke the 21. But the positive thing, despite the distribution day being added, was that we were able to see the bulls come in and bring us back to close above the 10 and the 21 day, which was super, super positive to see that. Thursday, we again kind of saw that we were supporting that 10 and also that 21 day moving average as we opened just basically flat, and then we're able to rally into the day, volume being a little bit lighter. And I think what a lot of us were really kind of hoping for at this point was to get a little bit of like a higher, tighter action, right? To kind of just tighten up around here, hold those moving averages, let some charts kind of develop, and then break out to the higher side. But as we always know, the market doesn't give us exactly what we want. Market's going to do what it's going to do. And that's essentially what happened. We had Friday with the big gap up, all-time highs. We held above that high throughout the day, intraday of 1010, and then we closed up from the open for the day. Not at probably in like the mid-range for the day. I actually didn't calculate that, but still positive. The big thing, though, was lower on the volume here. So expectation breaker, as Webby would say, as we jumped higher and got above. I don't think a lot of us saw that really truly happening. A lot of us, though, I think we're going to trade a little tighter. But yeah, market's going to do what it is going to do. So really kind of want to take a step back and just look at this action from the 1010 drop. And a couple of things that I think are positives are we had that clear support going back to the September 25th, and then obviously the low of 1010. The closest we got was this 1014 day. Other than that, we maintained above those levels, which is also positive because that was maintaining above that 50-day simple moving average. So despite the chopping around, it was good to see us hold these levels. I think when we had such a big drop, it could have been very easy for us to roll over and break through that 50-day simple moving average, which I think a lot of us wanted just to wash some things out. But needless to say, we held those levels, which was very, very positive. On the downside, though, and I kind of alluded to this as we were talking about this chart, the volume on the upside was definitely lower than the volume on the downside as you look through basically straight across from here. So something to take note of, that there was more downside volume in this area than there was upside volume. Other than that, like I said, we were hoping to go sideways. We didn't get what we were hoping for. We're hoping for some tightness, and we kind of jumped up from there. So, hey, is what it is. Our job is not to predict. Our job is not to beg the market to do what we want it to do. It's to basically act and react based on what the market tells us day by day. Yo, what's up, Chad? Got a couple of people from the Discord over in YouTube. Appreciate you guys joining. Shout out to everybody on X, whoever's over there. I see a bunch of you guys over there. All right, so let's take a quick look at the weekly. So the big thing on the weekly here, we closed in the 92.45% range. So closing in the high because of that gap up on Friday, super, super positive. Closing at all-time highs, super positive. The big thing here, though, the volume was higher. The volume was strong for this week. But again, when you go into the daily, you see that it was a lot of downside volume on the day-to-day. So take that for what you will. All right, so real quick, let's jump over to the daily. And what I like to always go through is just set my expectations for the week. What am I looking at on the upside? What am I looking at on the downside? And then this way I know how to react as the market acts throughout the week. On the upside, it's pretty simple. We want all-time highs. If we're going to maintain that upside, I would also like to maintain the 1010 high. Right? I do not want to break that. I do not want to break the low here. I would like to see us find, if we do intraday come back to here, just find support. So that's on the upside. Pretty simple. On the downside, the big thing is the, like I said, the 1010 high. If we break below that, negative sign. Then you got your 10-year 21, as we always do. Holding above those levels. If you see, we have found a way pretty much since about back here to close above the 21. So if we can at least maintain closes above the 21, that would make me feel a little bit better, but it could just mean some more choppy action. From there, the 50-day has risen and come up to here. So we have the 50-day. And then, like I said, the big like macro look at what's going on right now is maintaining these 925, 1010, and the 50 low, 50 right here. And maintaining these two lows, maintaining that 50. look, we could just get rejected and continue to chop sideways. We've seen that happen with the market many, many times before, where we get these kind of fake breakouts and pullbacks. We could bounce again around 10 to 21. But for me, from a macro look at this overall uptrend, this is my line in the sand. This is where if we break below this, I'm going to get super, super bearish because we've shown that we can support those levels. And if we then break through those levels, that's not a positive sign. All right. We'll take a look at the S&P just quickly for a visual, but to be honest, there's nothing really else to say. It's pretty much identical to what we saw on the NASDAQ. So there you have your daily and there you have your weekly right there. All right, let's jump over and take a look at Deepvue and the theme tracker. For those who don't know, I am a Deepvue partner. This is the tool that I use for all my stock trading. I do all my stock screening, my theme and industry group analysis, looking at fundamentals. All my basically routine gets done through Deepvue. Really love this tool. If you are interested in checking it out, right now there's a wait list. It is going to be open up soon. On X, I have the link in the in my bio, and on YouTube have the link in the description of this video. So yeah, click that link. You can get yourself set up on the wait list. There is no commitment, so if you decide you don't want to try it out, that's fine, but at least get you a spot on that wait list. All right, so looking at this theme tracker, which is one of the things that I absolutely love about this tool. We'll look at kind of on Friday really quick. Okay, that's because it's going from that week. All right, so we're on the weekly right now. In terms of what I've seen, I think a lot of people probably saw this in your stock screening throughout the week. Medical, biotech, genomics in the past week or two has definitely shown some strength. In this week, really, it was the medical that kind of shined above everybody else. The big thing that was popping out to me recently is the oil and gas. I'd mentioned this in Discord. There was a couple of stocks that had kind of jumped out at me from the oil and gas sector. And then semis definitely showed some strength, and software definitely showed some strength. These two industries, AI, a little more broad-based of a theme, and obviously AI is what kind of we feel is driving this market. So yeah, those are the big groups that I have seen do well, and you can see that also on a 1 month. Bitcoin miners kind of got hit pretty bad this week. They've been leading very much consistently. So we'll see if this trend continues where Bitcoin miners are starting to underperform. Then we'll likely see some things start to climb up the ranks and take them out. Solar was another one that we were seeing some strength in that has now, you can see it over here, but now it's had a weak. So look, this is just 1 week. We'll see what happens consistently, and we'll see as these things start to shift. But I like to look at things week by week to kind of get a feel for where I might see rotation going and where those big institutions are pulling money from and putting money to. All right. One of the things that I've done, and if you guys have any interest in this, please reach out to me. X, you guys can just shoot me a DM or even just tag me in a message or something. And on YouTube, drop something in the comments, and we'll find a way to connect. But I created this ETF list, essentially of a ton of ETFs covering all different industries, sectors, different stuff, because I like to have that visual. I like to have that chart looking at these. And what I really love about Deepvue is if I click on this H, I get the holdings for that ETF. So I can actually directly see what is in that ETF, what's driving that to look strong. Wanted to just take a quick look at this. Like I said, oil services ETF. This had a this is on the daily, so this had a strong week. This kind of took out here. Macro, it's basically it's in a stage 2 uptrend. So this is definitely something I like to see. But what I like to do is just kind of click through these and just kind of see what I'm starting to see. Here you have those oil refiners looking good. This one stood out to me, the lithium battery tech ETF. Kind of had a breakout right here from this sideways action. It has strong uptrend, kind of pulled back with the market, held that 21 and then broke out. And then you can see, like, these are some of the holdings in there. What's that? Albemarle, I forget how to pronounce that, but that's a lithium. You got Tesla, you got a couple of names in here. So this would be an interesting thing to keep an eye on as this group kind of have broken out. But yeah, I'm not going to go through all these. Aerospace and defense, that's showing some strength. But what I like about this, you guys saw also steel and theme tracker, is it gives me the ability to look and see what are these groups really truly doing. Are we super extended? Are we pulling back and forming some sort of basing pattern? Are we maybe just coming off of bottoms? That happened to solar a while back, right? We had kind of seen solar over here where it was just starting to take over these moving averages and begin to form possibly a stage 2 uptrend. Too early for me to be wanting to dive into this. I'm not trying to bottom pick, but as we started to see the strength hold and we saw that stage 2 start to begin, that is where I'm getting more interested. So I'm basically just using these as a chance to see what's going on with each one of these industries. There's some broader groups. There's some more dialed in, tighter groups. And like here's just IPOs, things like that. So if you have any interest, just shoot me a message. I'll share the Excel file with you with all these names, and then you can just drop it into whatever platform that you're using. All right. So with all that being said, let's talk exposure levels. So all-time highs. Anytime we break out to all-time highs on the indexes, it's a positive thing. Given that we were going sideways, given that choppy action, the break to all-time highs at the very least should have you starting to lean more bullish. I understand that we could get that fake breakout, that they could just be pushing things up, and then we might just completely reverse. Very, very true. But anytime we hit those all-time highs, hold above those all-time highs, that should start having you think towards more of the bullish side. Ideally, we want to see that follow through. We want to see us hold those levels. We want to see us continue higher, and ideally see some of that volume come into the market, 100%. Other than that, I think the big thing is don't dive into this market, right? Just like I was saying, we could easily roll over. You don't want to just go from 20, 30, 0% invested to 100% invested or on margin when things are not clearly trending upwards. You want to allow the market to slowly pull you in little by little, taking smaller positions and letting the market force you to slowly increase that exposure. Over trading in times like this is a killer, whether it's through the chop, whether it's through maybe the idea of an initial breakout. If you start over trading, that's where you're going to get chopped up and things get rough. So let the market pull you in little by little. Really focus on those really strong setups. Don't just take any single position because there'll be plenty of stuff out there as always to buy. And that's my advice in terms of exposure levels and how I'm approaching the market going into next week. All right, so let's jump over back to Deepvue. And let's look at some stocks. So I got a couple that were given to me on Discord. And then if you guys have any that you want me to look at, just drop it in either of the chats, whether it's on X or on YouTube. We'll start off with NBIS. Emilov. I always say your name wrong. My bad, dude. So this was your request. Let's bring up the weekly. Let's also bring up those fundamentals. All right. So we're on the weekly. Let's go to the daily real quick. All right. So on the annual EPS not looking so great. Annual sales looking beautiful though. Quarterly, we're starting to see you got that triple digit, things turning around, looking positive there. So not perfect EPS, but we're starting to see some sense of profit making here. We see tons of institutional sponsorship pouring in here. Chad, I got you. GH and Credo. Credo I have on here, but GH I'll definitely add. All right, and then real quick, just looking at the macro, right? We had this was from 2020, this giant, huge base. Then we are clearly now in that stage 2 uptrend. And then as we're coming in here, we can see a couple weeks down. We're looking a little tighter. So from this, right, we had arguably this like cup with handle style breakout right here. It's kind of gone on, broke the 21 a little bit here, gapped up. And then it's just continued to ride that 10, and then it's kind of rolled over right around when the market was starting to roll over. We closed, let's see, looks like we might have closed just at that 50-day simple moving average, so finding some support there, and now we're starting to kind of rally up here. For me personally, right, this is positive. I like this. I like that we found support. I like that this was a prior leader, that this has uptrended, this has shown strength. What is this? In technology, full stack infrastructure. Okay, so we're assuming comes into that AI. Yeah, AI play. We know AI strong. We reclaimed that 10 to the 21, which is the green and the purple line. Super positive to see that there. Am I taking a position here? No. Am I going to closely watch this name? Yes, right? Just to lows, we're looking at almost a 20% drop. Ideally, we'd like to see this kind of tighten up. We'd like to see this go a little bit more sideways, correcting a little bit more through time, and then give us an entry, either an early entry or for you more traditional CANSLIM traders, maybe we get a cup with handle, some sort of base from this. So for me personally, I'm not one of these pullback traders. And at this point, I think we're pretty far extended off of that. Like I said, we did reclaim the 10 to 21, so that is positive. But buying here, I just think is a little too far off of any kind of support levels to put a sensible stop, because I think we could easily chop around sideways through here. So great name. Definitely think it's worth watching. But I just think at this point right here, I wouldn't be looking to entry. I'm just kind of going to keep an eye on this for the future. So good call on that one. Let's jump over. We'll do, Chad, you want a GH. Is that Guardian Health? Yes, Guardian Health. All right. So, all right. Fundamentals here. I have mine set up for the daily. Not the greatest, but in the healthcare, this is one of the things I like to think of. If a industry group is leading and is very, very strong and showing positive strength, I'm a little more lenient on my fundamentals, right? If I see big institutions pouring money into this group, and I think this is possibly a leader within that group, despite maybe that the fundamentals aren't perfect, that is one of those things that I kind of balance out. So clearly this looks like it is one of those groups that is looking to take the lead. The sales are strong, EPS not so strong, but we have good fund ownership kind of increasing here. We're seeing some relative strength. Looking at the weekly, clear stage 2 uptrend, some overhead resistance, but I do like that we're at least in a clear stage 2 uptrend. On the daily side of things, this kind of broke out, right? You can have a couple levels you could be looking at here. You could be looking at a very, very small cup with handle, and maybe a breakout here on that higher volume. Honestly, that day looks beautiful for like a cup with handle type of breakout on the 16th. We had that high volume, above average volume popping up over there, breaking that little handle that we formed here. And then if you waited to just the all-time high breakout, which is a little more extended, we pulled back. We found support at that handle level, super positive. And then we bounced again right off that level, continuing those all-time highs. So higher lows, which I love to see. Just nice, clean pattern, good, clean breakout. Obviously, we did have this one day down over here, 2.98%. But yeah, if you're in this, I don't see anything wrong. I think this is a great stock to be in, being that group is doing well, being that you probably got in at a good point. You're probably, let's see if you even bought at the close. Yeah, so you're up 6-7% right now, which is positive. Definitely like this name. If you're looking at to buy it now, now we're a little extended. Now I would be waiting. Now, one of the things to keep an eye on, right? We have earnings, which is coming up. What day is that? Earnings coming up Wednesday. So, one thing to take note of: what is your plan going into earnings? Right? You were able to buy it. You've got some sort of a cushion at this point right now. What is your approach going into earnings? You should have that plan. You should know the way you approach earnings every single year, or every single quarter. And that's something that I would just evaluate going into earnings. All right. Hopefully that answered any questions you had, Chad. Let's go over. You also said Credo. I also had Credo on here. I love how I have to look at this. Oops. Reminding myself when I got shook out early. All right. This is great. So one of the things I wanted to bring up, right? A-Lab and Credo were both two names that at the same time I was looking at. I traded actually both these at separate times. This one I bought basically right here, I believe. They both went on good runs. This has now collapsed. This looks horrible. But Credo does not. So I like seeing that. I like two stocks that were basically competing, seeing that one is clearly outperforming the other. We kind of came back here. We bounced around at these 50-day. We've had some clear sideways action. We corrected, 27, let's just say 28%. So we got a nice, perfect kind of depth of a base, just under 30, which is super positive. And like I said, we've kind of seen that we pulled back And then now we've gone sideways. We started to hold those support levels. We've seen that 10, the 21, and the 50 all kind of converge. And then we kind of broke out from that flat range here. Pretty much, did we close the exact same level? Let's see, 143.87. I guess I close there. No, hold on. I'm looking at the open. 155.28, 155.55. All right. So for the most part, we kind of closed right at these prior area of resistance. We had really not a ton of resistance, but so if it's a pretty far move, because this is a high ATR stock, right? 8.48%. I could see why some people would want to buy here. But when I'm looking for those early entries, I'm looking for tight early entries. I'm not looking to just buy out in space. This to me right here is just a little bit extended for me to be putting an entry on. What I would now like to see, being that we've pulled out from here, is this maybe come up, form a handle, tighten up, move sideways, flag some, like kind of we're up here before I'd get an entry. This is high on my watch list. This has been on my spotlight list for many, many weeks. Let me go back to that. But yeah, I probably would not have liked to have entered on this day just because of how much room we have from even just here to just the next day's low. It's 12.76%. So a little too much risk in there for me if I'm going to do an early entry. And I just kind of, this is definitely high on my watch list. Tesla. All right. I wanted to bring this one up. Oh, it's on my, boom, right there. All right, Tesla, I'm not going to go through the fundamentals. Everybody knows what they do. Let's just look at the chart. On the weekly, I think a lot of us have seen what this looks like. So we've had a ton of sideways action going back to 2021, right? This thing ripped during COVID and just continued all the way to like the end of 2021 and then peaked. And now we've just completely gone sideways, correcting just through time, really making people who want to hold this long term sit and watch the market go as this thing just chops around sideways. We then saw some strength coming into the end of 2024, and then the market rolled over and crushed it. It has run up. It has formed some tight action here where I know a lot of people have got in. So somewhere around here, as we saw this kind of volatility contraction, I know a lot of people who had entered, probably even on this day, was almost 9/11 was probably one of the best days to enter on this one. It's ran up. We've got, let's just say from here. All right, 33% move, which is really nice. And now we've kind of went sideways and really tightened up over here. We had this, let's just do highs, lows, somewhere around there. So we had this kind of range move right here, right? As we were sideways here, where we kind of rolled over and then shot back up on earnings. And then now we kind of stalled right at this area of clear resistance. So what I would like to see is this kind of go a little tighter and then probably break out from this level. And I really like this name. I do not own it right now, but I just love the way this is setting up. And I'm hoping that it just continues a little tighter, a little more. And then we can kind of maybe hold that 21 day. So it really holds within this level between this high and this 21, tightens up, maybe get an inside day, give you a good early entry over there. Really closely watching Tesla for that. Got in there, but have since got shaken out. Yep, name of the game, right, Van Pro? All right. We went over Credo. We'll go over NVIDIA quick. And again, if anybody has names or if anybody disagrees with what I'm saying, I'm not going to get hurt. Just tell me. All right, NVIDIA. So this was one I was really watching to take out these highs. I ended up going with a trade on AMD. But I think needless to say, this is one of those big market names that we want to keep an eye on. We've really gone sideways and choppy. But what I like is that we've started to see things trade a little bit tighter, right? We've seen that we had this breakout, the pullback on 1010, and then since then we found support at the 50. You're seeing that a lot, right? Finding support at the 50 and then starting to trade much tighter. So as the market was still chopping around, there are names that are starting to tighten up, even though the market wasn't. So just like this overall tightness, like the support here. I think it's positive that we broke out here and took out this area of kind of resistance. And now we'll see how this kind of performs. If this gives us an opportunity to maybe get in and form some other pattern over here. The big concern, like I think this from a CANSLIM perspective, right? You know, we had this kind of base false breakout, kind of pull back in and then re-break out from these highs. So I could see why somebody definitely would have retaken this. I've had this happen actually with AMD in 2020, where it had like 3 false breakouts as it kept going sideways, and then I bought on the 3rd breakout, and it actually was a good trade. So you will see this, right? You will see these patterns form, these breakouts, then they fail, and they hold a certain level, and then they re-break out. And sometimes it's a couple times it has to re-break out. Sometimes it happens. It's one of those where, unfortunately, you never know which one's going to actually work, but eventually that breakout is going to work. So another name that I'm keeping an eye on. All right, and the final name that we're going to look at real quick, which I do own and I did buy, was MongoDB. Just completely jumped up over here on earnings. We had a, oh, Pete, I got you. Don't worry, I'll take a look at that too. All right, so we had this big, like 59% move on earnings up to here. We've now kind of flagged out over here. We've, for the most part, respected or bounced around that 10 to 21 as they really started to converge. We got clear, just kind of flag pattern forming. Oh, wrong tool. Jeez, guys, my bad. Clicking all over the place. All right. Right about there. You can see we were kind of like forming, got rejected, and then we've kind of retaken that downtrending line. But we could not get above these highs over here. So I did buy. Oops. I can't draw for anything today. But then we kind of rejected and closed actually down from the open. So don't like to see that. The volume on this has been very low, which is somewhat of a concern for me. But I put a very, very small position on. And I just like that this is flagging. And my stop is basically, I forget what I'd have to look exactly where I put my stop. Yeah, I think I said actually the moving averages. Yeah, because that's about 5%. So the moving averages are basically a close, move below those moving averages was going to be a stop for me. So I like that this is flagging out. I'm hoping that we can kind of get a break back above here. But if it fails and this breakout didn't work, is what it is. But really like this name. You know about the software kind of area and everything doing well, IT services, things like that. Yeah, another name that I like. All right. For Pete, we got INTC. What do we, this is Intel, right? Intel, I don't even know, everybody knows what Intel does. All right, so, all right, right off the bat, this is one of those things that I say, is this the leader in the space, right? Looking at the earnings, looking at the sales, right? It is just underperforming. We've seen a decline. It looks like it's maybe starting to turn around over here on the sales, but the earnings are just collapsing year after year. We did see this peak, right, in Q3, which is positive. We're starting to see some, that's why we got this blue line, growth in sales, but it's nothing to write home about. We're also seeing a decline in institutional support or institutional sponsorship, so I don't like that. It's in a leading group, semiconductors. We know that. My biggest thing right off the bat with a name like this is this leader, right? The chart may look great, and I'm going to look at the chart, but is this the leader? Do I want to be in this, or do I want to be in the leading name? I want to be in the leading name. So that's what I'm going to start off with. I'll zoom in here. I see what you're looking at, right? I see that we had this, boom, big break up here. Let's go to about here. Yeah, 59% move, 58% move in 13 days, right? 2 weeks, 3 weeks, 3 weeks. And then we've kind of tightened up right around that 10 and clearly held above the 21. So I like this, right? I like the pattern. I I don't like that we tried to break to these highs over here and then roll back in. It lets me know that this might need some more time because we haven't really corrected through price, right? We corrected 10%. So if we're not going to correct through price, then what I really want to see is that this corrects through time. And I like those terms. It's one of the terms I got from my buddy Sheik, which is something I never really like verbalized. But yeah, if we're not going to correct through price, we want to correct through time. And we haven't had much time sideways. So that's why we're getting this break up and then fail. Big thing for this one, I want to be in the leaders. Semiconductors are looking strong. I just don't see, this is just not a leader in the group. We can see it through the fundamentals. We can see it through the chart. Look, could you make money off this as a trade? Absolutely. But again, rather be in the leaders. Hopefully a good sign for NVIDIA and AMD. Yeah, absolutely. That's right. We want those themes to do well. We want those industry groups to do well, sectors to do well. And when you start seeing a big move within an entire group, that's super, super positive. And that's why we try to focus on those areas. So the fact that this is looking, right, it's came out of that stage 1. It's broke out into a stage 2. The fact that we're seeing this since September, positive for the group as a whole. Good to see everybody in this group doing well, but I want to be in the leader. Yeah, and like here's AMD. Like I said, I do have a position in this where it just kind of gapped up, flagged out. It did so right at all-time highs, and then has kind of gone on from there. So I love that chart pattern. Was a little tough buying this a little far out there, right? But yeah, still this with my breakout trades or something like this, that's kind of how I just put in a risk kind of stop percentage of my portfolio stop that I'm willing to put in on this. Really though, with this, what I have put my stop at is the low of day over here. So if we come back down into this flag, to me that's a negative sign. It's going to probably need more time. I'll step out then and I'll sit back. I don't care if it rallies without me. I'll use that smaller risk and see if it gives me another chance to get in. But hopefully this just stays above this level and just continues to go. All right. Let's finish this off. Final thoughts. All right, final thoughts. I kind of said this, but look, overall, things have improved in the market. Things are looking much better. We're starting to see names that look much healthier, breakouts, and we'll see if those are to hold as well as the market is to hold. And I think that's the big thing. We've seen the positive action. We've seen how we ended out the week. We saw us get into all-time highs in stocks and the overall market. Does it hold? Do we continue to maintain above those levels on both the stocks and on the overall market that we expect it to hold? If we do follow through to the upside, can we see some volume start to pour in? Can we see that this was now the pause is over and we're about to continue another uptrend going into the end of the year? Another big thing, which I can't believe I didn't mention, because earnings season is basically peaking, right? We're not peaking, but we're at the start of earnings season. We're going to see a ton of companies reporting. Have a plan going into earnings. Look at, sometimes you're going to have to forego an entry because earnings is in 2 or 3 days. And realistically, the likelihood of you being able to get a cushion on that position going into earnings in that volatile time period is slim to none. And it sucks. And sometimes the stocks break out and then the earnings come out and they go on without you. But it's all about risk management. So have a plan. Know when these stocks are reporting. That is one of those things I see a lot of newer traders do, is they're not aware when their stock is reporting. And then all of a sudden they're like, why did this move down 10% today? It's like, well, there was earnings this morning. Oh, I didn't know. Like, know when your stocks are reporting. Know when stocks that you are looking to buy are going to be reporting, and have a plan. And be strict to that plan, because there's a reason for it. Yeah, there are going to be times where you're like, I wish I would have bought it. This thing jumped up 15, 20%. Oh my God, if I would have just bought it anyway before earnings, it would have worked out. Yeah, absolutely. There's also going to be times where you're like, oh, I'm glad I didn't buy that because the stock's down 15% on earnings and I would have got crushed. So have a plan and stick to that plan. Vanpro picked up Amazon off the 200. I don't know if I want to hold into earnings. All right. So I personally, I am the same with every single name, unless it is a strict trade going into earnings. If I am buying one of these true market leaders, stocks that have the ending CANSLIM, and I have a 10% cushion, As long as my position sizing is proper and I don't have an oversized position, I'm willing to hold into earnings. That is my approach. That's what I feel comfortable with. This way, if a stock is to drop 15%, all right, well, I just took the original loss. But if the stock is to take a nice big move, then I can capitalize on that. So you have to kind of have, okay, and I just see what you said, probably just going to trim. Absolutely. And that's, so, right, I'm not gonna switch screens real quick. I'm just gonna look. You said you bought at the 200 level, so I guess you're up. What is that? Two. So you're up like 12% or somewhere around there. Yeah, and that's kind of what I like to do. If I'm over that 10%, I just have a reasonable position. I think, is this a stock that I see a longer, bigger term move? Is this a true market leader? Is this a stock that has all the CANSLIM characteristics and ending CANSLIM in a leading group? I'd be willing to hold into earnings. If it's not, then sometimes I'll just take the trade, take the gains, and then if it gaps up on earnings and gives me another chance to enter, great. If not, no big deal. It's just a trade. Just have a plan and stick to that plan with every single one of these stocks when they come out to earnings. What kills people is they kind of play like Russian roulette with each and every single one of their earnings, and they have an emotional attraction to one stock, or they have a feeling about this stock, and they take this name and they hold into earnings, and this one I just sell into earnings, and they're very wishy-washy with how they approach earnings, and then you're not going to get that long-term risk management consistency in your plan, where you're going to see a benefit sometimes, not benefit other times. Just be consistent with how you go about your earnings. Don't try to pick and choose and think that you're smarter than the market and you're going to be able to guess which one's going to gap up and which one's going to gap down. I've seen people even, throw in a ChatGPT, what do we think the earnings reaction is going to be to Tesla? And it thought Tesla was going to be down for the day and it was up for the day. So it's one of those things. Green on bad news. Come on, man. We're probably just going to trim. It was green on the outage news, so I figured it is bottoming. Green on bad news. Come on, man. Yeah. Awesome. Yeah, that reaction to the news is everything. All right. That's all we got. This is a long one. I appreciate everybody sticking around. Good amount of you. Thank you. Finishing off, as you guys know, YouTube. There you have the X link for my X account. X, you have the YouTube account, which is where all these get saved as well. It's a little easier to view the replays on YouTube than it is on X, but they're on both. Discord, I keep talking about that. There's a bunch of you guys, especially on YouTube, from the Discord channel. I appreciate you guys. Shout out to you. YouTube has the link in the description for the Discord channel. On X, just shoot me a message and I'll shoot you an invite for it. It's free. And then there's my email account if you feel like you want to email me, or really if you want that oh my God, Jordan Beck. If you want that ETF Excel sheet that I have, shoot me an email here and just say send ETF Excel, and then I'll just send it to you through the email. Other than that, that's all we got. All right, everybody. Enjoy the weekend.